While EV adoption in the U.S. is growing, the pace is decelerating as range anxiety and affordability remain key challenges. But the demand in China remains strong. This comes as China's self-driving startup, WeRide, pushes its IPO to next week. It would be the second major China EV company to seek a U.S. listing. EV maker Zeekr debuted on the New York Stock Exchange back in May. Joining us now, Mark Fields, former Ford Motor Company CEO and a CNBC contributor. Mark, it's good to have you on the show. I do want to get into the autonomous driving piece of this and what we're seeing in China. But first, the slowing demand we are seeing for EVs. We've been talking about it for a number of months, but what breaks us out of that doldrum, if you will?
Well, I think what's going to break it out of the doldrum is two things. One is obviously the continued build out of the charging infrastructure, because, people talk a lot about range anxiety. I actually don't think about it that way. I think it's really about charging anxiety on the side of the consumer. So as that continues to get built out and the average consumer can actually see that on the streets, because a lot of the charging stations right now actually are hidden in certain places. So I think that's the first thing. And the second thing is more affordable models. I mean, you're starting to see, automakers like GM introduce some more lower priced models, which is the key to getting mass adoption. That's why you see such a huge uptake in China, because there's a lot of very mainstream models at reasonable prices, whereas here in the U.S., most automakers have started at the luxury end of things and then had planned to work their way down.
And if we broaden this out above and beyond EVs, if you look at the North American market, the U.S. market specifically, we are waiting for a Fed cut. You do have borrowing rates that are high. I realize the prices are starting to come down on cars, but those are still elevated as well. Auto insurance continues to tick higher. How much hinges on a Fed cutting cycle to see some of the demand that's starting to build up for the automakers actually be worked through?
Well, it's a great question, Morgan, because I think, you've seen a lot of the pent-up demand from COVID essentially been worked out over the last year or so. So I think going forward, if the Fed cuts, obviously that will help the consumer to finance their cars. But if you look at it on the EV side of things, clearly the biggest inhibitor right now on EVs here in the U.S., besides not having kind of mainstream models, is, that they're higher priced than their ICE counterparts. And the other thing, and you mentioned it's very important, when people look at buying EVs, they also look at the insurance piece of it. And insuring an EV is much more expensive than insuring an ICE vehicle. So the bottom line is, I think a Fed rate cut will help the overall industry. I don't think it's going to benefit, EVs over internal combustion engines, but clearly it'll be a net positive. But you are seeing some of the steam kind of come out of the growth of the industry. The industry overall here in the U.S. combined only grew a little over 2%. And a lot of the forecasters expect about a flat market for the second half of the year, with increasing incentives from manufacturers as they look to move out those units.
We talked about the robustness of EV adoption in China, but we also know China has taken steps to continue to facilitate autonomous driving capabilities as well. Case in point with WeRide, which has, and we don't know why, but they have postponed their IPO here in the U.S. by a week as of today. When we saw Zeekr go public, stock's down almost 50% since that debut. We know that the tensions between the two countries, including where some of these new driving technologies are concerned, are getting more taut. So why go public if you are a Chinese company in this area in the U.S.?
Well, again, it's a great question, Morgan. And I think it's pretty simple. The IPO market in China is essentially, completely dried up. These companies need money and they need capital to scale and to stay competitive. And they're going anywhere they can. And they look at the U.S. market and they say that market's open. Let's try it. And oh, by the way, let's get in there before the elections, because you never know. So I think that's the main reason they need that capital. VCs have essentially kind of closed their pocketbooks to funding autonomous vehicle companies that have a very long pathway to profitability. But, I think any investor that's going to potentially invest in WeRide, they have two risks there, right? They have the business risk, which is around Can this company have a business model to make profitable growth consistently and master the technology? And then the second risk, and you mentioned it, is the geopolitical risk. It's going to be really challenging to win investor support with a lot of these geopolitical risks, which can impact a business with just the stroke of a pen.